me guess you have just started trading and you felt that a trading strategy is the key to trading success, right? Well, keep watching and I will share with you all the basics of a trading strategy you need to know. So actually there are dozens of trading strategies, right? Some of them are complex and use various analytics tools. Others are purely based on reading the chart with the naked eye, but all of them aim at identifying these two key elements of any price chart: the support and the resistance level. When a price is trying to go down but it's like hitting the floor, unable to go lower, this is the support level. When a price is trying to go up, or in the opposite case, when price has been going up for a while but eventually got stuck at a level where it cannot breach to go further up, as we have here, that is the resistance level. So support and resistance level are like floor and ceiling for the price. It bounces around those levels, knocks at them but get reflected various times. These two chart elements are key to chart reading because price trend often reverses at those two levels. After hitting the support level various times, the price may go back up, so you can open up and trade, or similarly after knocking the resistance level, the price may go back down just as we have here, so you can open a corresponding down trade. So how to identify these levels, right? So basically what you do is to rewind the chart to a few hours or days back. You know that the levels where price has been floating with continuously for various times, just as we have here, right? If you found such levels and price is somewhere around them in your current sessions, then there is a higher probability that it will hit them again today, and eventually the trend may reverse around them. Keep that in mind and prepare to make corresponding trades. So now let me show how can open a trade simply looking at the support and the resistance level. I will do that on the All-in Trade platform, as I already have opened. And why is it? Because it's simple, right? There are no extra features that will just hang in the occupying screen space. And at the same time, all you need is here. It's simple to navigate, that's no time to understand, and it's just nice to die. So here we go, we already have the app open. We make sure we have the funds in the balance. As you can see here, we open the instrument that we want to trade. Here we have the Asia Composite Index, right? Then we look at the screen, or we screen the chart to see our entry points. And then as you can see here, price has been touching this level. So we break down our time frame to a level that gives us a microscopic view in order to understand when it will be good time to enter, right? So similarly, we just confirm, or let's just confirm whether if this observation the previous trends. So in the nearest time frames, you can see from 15 seconds to 1 minute, you can see price actually heading down, right? That is towards the support level. So yep, look like it's a valid support level. So what do we expect? We expect that price will be deflected by the support and eventually go back upwards or downwards, either way. So therefore, what do? We hold on, we wait for a very good time, and I believe at this point price is probably rejecting around this point. So we, in order to guarantee or to ensure that we are actually on the right track, we hold on to find out in which direction price is going to go, and then we will continue with the trend. So in this case, I have set a duration for 3 minutes for this trade, since we expect price to go from this level down. So let me break it back down to 30 seconds on a new candle, right? I will open a down trade for $200. So here our 3-minute trade is open. Down trade is open. We will wait. So now that our trade is actually open, let me share with you an important trade that you need to use in the overall trading process, right? You need to be patient. Don't rush to open trade. I know it sounds, useless, it sounds like useless general word, but give me a second, I will explain. Because it's a common rookie mistake to think more is better. New traders often believe that opening more trades will automatically, lead to more profit. So what do? They rush to open dozens of trades in a session, in an hour, or maybe in a minute, just because they think that if they open 100 trades right now, they will see an overall profit in the next minute. That's not true. If you blindly open 100 trades, 80% or 80 of them can easily go bad. There is no such thing that statistics equal profit in trading, right? Yes, it's true that many trades help disperse your risk across them and then reduce overall risk ratio. It's all brilliant and necessary thing to do in trading. But in itself, it actually cannot contain any promise of success. As you can see, price has certainly touched the level. So we are actually on track. So yes, back to what I was saying, right? So each trade you open has to be, carefully thought through and based on analysis. If your analysis is slow, that's alright. You can equally take your time, but then open your trade slowly. Sure, you might see pro traders making many trades very quickly, but that's an advanced strategy. They have a time tested system, but for a new trader, two sessions or two trades in a session or even just two in a day, might suffice. It's very natural and also even much advised things to do. So again, don't rush to open trade, analyze the market and then open a new trade. All your trades have to follow a trading strategy. If you don't have a comprehensive strategy and approach each trade individually, well, that's okay. But always read the chart. You find the support and the resistance level. You wait for a price to hit those levels for a few times. You confirm the observation other time frames, then open your corresponding trade. So in case if you miss the movement, no worries. You can still keep scanning. The market will be here in a minute, in the next hour, even tomorrow, even next week. And there will be numerous trends and levels for you to catch and trade upon, right? So we can try again for $300 on a new candle. As you can see, price has actually broken down to these levels. So we continue down again. So just as I was saying, right, the main rule is to be patient. Don't rush to open trades and also follow your strategy. The support and the resistance level are your best friend in trading. So if you trade by these rules, you have the best chance to make stable gains. Let's break down our time frame once again, and I think for the next 2 minutes, I will go down once again since we are actually heading to our support level and I expect price to bounce back up after this level. So we move back to 1 minute to find out how price is faring. As you can see, just trading on levels without any indicator, so it's just rule based for stable gains. So we wait for a trade to elapse. I believe at this point we have.